Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 11th of April 2020 and we're publishing our gold and silver weekly update for the week ending the 10th of April. Though we have to be mindful that markets were generally closed yesterday, it being Good Friday. Gold rose $68 last week from $1,619 to $1,687. Having hit a momentary spike high of 1,718 and a low of 1,609. This is a weekly rise of 4.22%. In sterling terms, gold finished the week at £1,353. That's up £35. And in euros, it closed at €1,542. That's up €45. Silver rose at $1, from $14.41 to $15.41, having hit a spike high of $16.02 and a low of $14.29. This represents a weekly rise of 6.95%, nearly 7%. In sterling terms, silver closed at £12.37. That's up 62 pence. And in euros, it closed at 14.09 euros. That's up 0.76 euros. The gold to silver ratio fell from 112 to 1 to 109 to 1. And it seemed to oscillate between those two figures for most of the week. Now, the Dow Jones closed on Friday at 23,719. up 285 points on the day and up 2,667 points on the week. The S&P 500 closed at 2,789. That's up 39 points on the day and up 301 points on the week. And the Nasdaq closed at 8,153, up 62 points on the day and up 780 points on the week. So a good week all round for equity markets. And this week's rise has reduced the monthly falls which we reported last week, which had ranged from 14% loss to 18.6% loss, and it's reduced those losses now for the month from 2.2% to 5.2%. Brent crude closed at $31.38, down $2.73 on the week. And WTI crude closed at $22.76. That's down $5.58 on the week. There's quite a disparity there, and we suspect that disparity will close next week. The dollar index stands at 99.48. That's down 1.09 points on the week. Now, last week we quoted analyst David Becker, who highlighted the technicals for us moving forward, with which we agreed. And this is what he said. Quote, "A short-term trend is now positive. The 10-day moving average has crossed above the 50-day moving average, which means that a short-term trend is now in place. Short-term momentum has turned positive after just turning negative. Fast stochastic generated a crossover buy signal. Medium-term momentum has also turned positive, as the MACD index generated a crossover buy signal. The MACD histogram also generated a crossover buy signal, but the trajectory is now flattening, which reflects consolidation." Unquote. Now, we added to his projection our take on the word consolidation, and this is what we said. Quote, "We are positive more gold than silver, and can indeed see the consolidation tempering more to the upside than the downside at present." Well, apart from perhaps the first hour or so of last week's market opening, gold was on the rise until mid-Tuesday, then consolidated a little, and then embarked on its rise again, especially once the weekly jobless figures were announced at 6.6 million. These were the very figures we advised that you look out for. Now, an interesting article by Lance Lambert in Fortune.com under the heading of "Real Unemployment in the United States has likely hit 14.7%. the highest level since 1940. That's the headline. And this very briefly is what he wrote, quote, "We're likely sitting at the highest level of joblessness since Franklin Roosevelt was president. Another 6.6 million Americans filed initial unemployment claims in the week ending April 4. That follows 3.3 million and 6.9 million in the 2 previous weeks, according to the US Department of Labor." Now, MarketWatch.com also quoted the following under the heading, "Initial jobless claims, aka layoffs, still soaring." Now, we'll repeat what they've had to say. It's a little longer, but it's important to note. Quote, "The latest round of layoffs and furloughs soared by another 6.6 million in the first week of April, bringing total job losses in less than a month to 16.8 million. Initial jobless claims, a rough proxy for job losses, have now posted increases of 6.6 million, 6.8 million, and 3.3 million in the last 3 weekly readings since the middle of March." Quote, "To put these mind-boggling numbers in perspective, before the March the 21st surge, the highest single weekly reading ever recorded was 695,000 in 1982, unquote, said Chief Economist Joshua Shapiro of MFR Inc. Nor is the damage about to let up. New jobless claims are expected to continue to climb, with so much of the economy shut down and the full resumption of normal activity months away. The harsh reality is that the level of initial unemployment insurance claims is unlikely to recede in the coming weeks. Economists Dante De Antonio and Matt Collier of Moody's Analytic said. Initial jobless claims leaped a seasonally adjusted 6.6 million in the week of March 29 to April 4, topping the 6 million MarketWatch forecast. What's more, new claims in the last week of March were actually revised up by 219,000 to a record 6.87 million, the Labour Department said Thursday. Already, the ranks of the unemployed appear to have exceeded the prior record of 15.3 million during the 2007 to 2009 Great Recession. I shall repeat that. Already, the ranks of the unemployed appear to have exceeded the prior record of 15.3 million during the 2007 to 2009 Great Recession. What's more, the number of Americans collecting benefits has quickly topped the prior all-time high of 6.6 million. Some 7.5 million people were receiving benefits at the end of March, according to delayed government data on continuing claims. They are reported with a 1-week lag. The big picture, the unprecedented surge in jobless claims, has already pushed unemployment above 10%, economists say, more than double the officially reported 4.4% rate in March. The current pace of job losses suggests the unemployment rate will soon move past 15% and perhaps even exceed 20%, coming close to levels last seen in the 1930s. Unquote. That's the end of that article piece. So coming back to our commentary, there certainly is very little optimism short term on the job front. And of course, when this situation subsides, no one really knows how quickly and how many of these people will find themselves back in work again. So against this background, we can see quite clearly why there has been so much downward pressure on silver prices because of lack of industrial demand and the prediction of a further continuance of a lack of industrial demand, but its saving grace being the rising gold, and then silver consequently benefiting as a monetary metal. An argument we've put out literally for years and is now agreed with and repeated by most analysts. So perhaps our cautionary message is do not underestimate these large numbers of unemployed and watch out for the levels and speed of re-employment when the economy recovers, as these will be most indicative and will actually dictate to a large extent the rate and depth of any economic recovery which may follow. Now, in addition to the unemployment figures, the Fed also announced on Thursday as much as $2.3 trillion in additional aid, and there is no doubt that this easing of monetary policy is causing, or at least assisting, the attractiveness of gold as an investment as opposed to just a hedge. The technicals on gold are now most encouraging. For a short time, gold spiked above $1,700, and by doing so it broke a key resistance point. However, volumes at this level have been reported as either disappointing or low, suggesting a possible short-term pullback. But we have the 50-day EMA at $1,500, offering significant support, and there does certainly appear to be reasonable support at $1,600 currently. Silver almost followed gold's movements last week verbatim, thereby showing us that its demand from a monetary perspective is now dominating the headwinds it's receiving from industrial demand falls. Its temporary move above $16 is significant, and now the technicals are suggesting support at $15 and resistance at $16.50. This is a good rise for silver and a creditable performance, but we should also not forget that silver prices are still down over 9% from just a month ago, and so we have to put its recent rise since the sub-$12 low into perspective. As we stated a week or two ago, we were of the opinion that silver's low was in, and we did suggest to our listeners to consider buying at the $12 to $13 level, albeit we admit you would have had to probably paper trade it as so little physicals available, or use ETFs or via companies like Bullion Vault. Those who did so would now be looking at a $2+ an ounce profit, even allowing for charges and spreads. All this in just 3 weeks. With regard to economic data, the important day, as we pointed out last Saturday, was Thursday, the jobless figures. And also the core CPI March figures came in at 2.1% against a forecast of 2.3% and the previous month's figure of 2.4%. So now let's take a look at this week's US economic news to be announced. Well, on Monday, nothing's scheduled because after all, it's Easter Monday holiday. Tuesday, we have the import price index for March. Wednesday, retail sales for March, retail sales excluding automobiles for March, industrial production for March, and there are other data points, but not of their major significance. So an important day, Wednesday. Thursday, the weekly jobless claims, again a crucial number that will be watched most closely. And housing starts and building permits for March. And on Friday, there's nothing scheduled. So Wednesday, and again particularly the jobless figures on Thursday, should attract all of our attentions. So the next few weeks are indeed going to prove quite interesting for gold and silver. The risk of holding gold with 0% or sub-0% interest rates, as witnessed in much of the Western world, is very low, as there is no or little yield to compete with it. In addition, with rises of 5 to 10%, sometimes in a day and certainly in a week, this makes gold and silver attractive to speculators and investors alike. The level of financial support being injected into the system by governments and central banks via money printing will eventually undermine those currencies and cause gold in particular to rise. With such high levels of unemployment now occurring, it's difficult to see an environment whereby all of these jobs will be reinstated, resulting in governments having to increase their expenditures further in terms of benefits. All of these situations are positive. Gold, which will drag up silver by its bootstraps too. Of course, when countries do get back to work and start demanding silver again for their industrial applications, we shall see silver come into its own, and it too will then rise independently again. The only aspects really fighting against gold and silver's further rise is any re-emergence of equity markets, which is possible with the level of stimulus being introduced. And of course, one should not forget that a lot of companies' overheads have now been got rid of due to unemployment. And this might, just might, encourage companies to be more discerning and conservative in their re-employment practices, thereby potentially reducing their future costs further. In other words, they may only re-employ a certain percentage of those that they've made unemployed. Also, we should not forget the likes of cryptocurrencies, and especially Bitcoin, which, despite falls in the last 6 months, have still performed well, with over 30% positive gains in the last 12 months. Though this, to be fair, is a lesser factor in our considerations than equity competition or stock market competition. Now, we're of the view that precious metals will maintain their strength over the coming months, though, as with all investments, there will be pullbacks. But again, we still have an eye on the US dollar, as that story has not truly unfolded as yet. But we will come to that in a future podcast video. The 2020s will be the decade for precious metals, as we predicted when we began the channel, which is why we said, all the way back in 2015, you must take a 10 to 20 year view when investing in precious metals. The question, though, on our lips too, is will most of that gain be achieved in the first half of the 2020s or the second? Do share your thoughts and let us know your opinions. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. Not forgetting that we update our Richard and Greg channel every other day, and we did so last night. And so if you haven't done so, please subscribe to that one too. We hope and trust you have an enjoyable weekend and Easter period. More importantly, that you keep safe, and that perhaps you look after or consider others who are not in as fortunate a position as you or we are, and maybe even a telephone call to someone who might be lonely would indeed let them have perhaps not an enjoyable Easter, but a comforting one. Thank you so much for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.